Welcome at UBP TV. I want to share with you our views on two themes. First, the European economic environment, and second, the different strategies of the central banks. First, European economic environment. The data published recently were better oriented. A rebound in business confidence, less dispersed confidence from the consumer sector, and positive surprises coming from the retail sales and industrial production for the whole zone. The trend in unemployment remains negative, but we have noticed that job destructions are lower in Spain and the employment picture is less and less negative in this country. In the Eurozone, countries are benefiting from a progressive recovery thanks to exports over the last months, and we see now the first signals in favor of a stabilization of the domestic demand. As a consequence, activity in the Eurozone is expected to show flat sequential growth in the third quarter, pointing towards the end of the recession and a progressive recovery close to 1% in 2014. We can take the Eurozone as an example. More positive surprises are expected from developed countries, and a firmer growth is expected in 2014. A 1.7% GDP growth is expected in aggregated developed countries next year versus a modest 1% due this year. 2014 growth in developed countries should be positive in all countries for the first time since the beginning of the financial crisis and close to their potential, even if this potential remains low. The rebuilding of the potential is another challenge, and we will talk more about it in the future, particularly with the example of Japan. The second topic is central bank strategy. For the Fed, its communication has changed and its strategy seems now pretty clear. The scenario seems to be now the following, given its communication and the latest development from the labor market. In September, a reduction from 85 to 65 billion US dollar in the Fed asset purchased. A further reduction could be seen in the fourth quarter if trade in labor market remains positive. And the first semester of next year, we should see the end of quantitative easing. The Fed should also declare that it will not reduce or sell the assets in its balance sheet, and it should wait for a simple maturing of securities in portfolios to decrease its balance sheets progressively. How long is the period between the end of quantitative easing and a first rate hike? Probably short if we agree with the view that unemployment rate should pass below 7% in the first quarter of 2014 and below 6.5% at the end of next year. So money market could anticipate a first rate hike at the beginning of 2015. What about the ECB? A new communication has delivered a forward guidance on key rates based on inflation, economic and monetary developments. This is another way to pre-commit a future decrease in key rates and also probably a decrease in the rate served to banks' reserves. Mr. Draghi has also mentioned that interest rates should stay low for an extended period of time, the same wording as seen in the past in the Fed. We still have to wait for the next meeting in August to see a decrease in interest rates. Unfortunately, a credit scheme seems less probable, even if we estimate that it is an interesting monetary tool to accelerate the current recovery, particularly at small and medium firms level. The announcement has a positive effect on the currency in the sense that a lower euro should continue to favor the export recovery. Unfortunately, nothing has been presented to moderate the negative developments due to contagion effects in the bond yields. OMT still exists, but only on paper, and no government will probably never use it, being just an insurance in case of a renewed major crisis. As a conclusion, we can say that monetary policy should remain accommodative until next September. More aggressive strategy should be expected from the ECB and also perhaps from the Bank of England, while the BOJ strategy will remain unchanged. This should balance the less aggressive strategy from the Fed. So, we enter in a transition period. Higher growth in G7 is expected with a new set of strategies from central banks and lower growth trend in emerging countries, particularly the BRICS countries. Thank you, and see you soon on UBP TV.